Imagine boarding a plane that first flew more than 2 decades ago, designed in the 1990s, built in tiny numbers, and retired by almost every airline that ever touched it. That plane is the Boeing 717. While most carriers have sent theirs to the desert, Delta still flies more than 70 of them every single day. It's small, quirky, expensive to maintain, and built by Boeing almost as an afterthought. So why on earth is Delta holding on? Today, we'll uncover the strange story of the 717 and why Delta refuses to let this misfit jet disappear. When you look at the Boeing 717, you're really seeing the last breath of an entire aviation dynasty. Its roots trace all the way back to the McDonnell Douglas DC-9, a short-haul workhorse first introduced in the 1960s. That jet spawned a long family tree: DC-9s, MD-80s, MD-90s, and finally the MD-95, which was meant to be a lean, efficient regional jet for the modern era. But by the time it entered the market in the mid-1990s, McDonnell Douglas was already on its last legs. The MD-95 had promise, but it lacked customers. Only ValueJet, later known as AirTran, placed significant orders. In 1997, Boeing acquired McDonnell Douglas and found itself the owner of this odd little jet. Rather than kill it outright, Boeing rebranded the MD-95 as the Boeing 717, giving it a fresh identity and hoping it could slot neatly into the lower end of their product line. But the truth was, the 717 was stuck in a no-man's land. It wasn't a true regional jet like the Embraer ERJ or Bombardier CRJ, which were cheaper and optimized for shorter hops. And it wasn't a mainline narrow-body like the 737, which offered more seats and better economies of scale. As a result, the 717 never really found its place. Sales were painfully slow. Only a handful of airlines, including AirTran, Hawaiian Airlines, and TWA, operated it. Boeing quickly realized it couldn't compete against newer designs like the Airbus A318 or the rising Embraer E-jets. By 2006, just 156 Boeing 717s had been built, and the production line shut down for good. On paper, the 717 looked like a failure, a plane caught between two categories, arriving too late to make an impact and too niche to justify continued production. But despite that rocky start, the 717 had qualities that would later attract an unlikely savior: Delta Airlines. Built with robust systems, a comfortable cabin, and surprisingly strong performance for its size, the 717 was underrated. For most of the industry, it was forgettable, a footnote in Boeing's history. But for Delta, it would become a strategic tool, filling gaps in their fleet when no other aircraft could. That twist in the story is where things get interesting, and it begins with a failed merger and a bargain deal that gave Delta access to dozens of these so-called misfit jets. Delta's relationship with the Boeing 717 really begins with another airline entirely, AirTran Airways. Back in the late 1990s, AirTran bet heavily on the 717, ordering over 80 of them to modernize its fleet. For AirTran, the 717 was the perfect fit. Small enough for thinner routes, but still offering the comfort and reliability of a mainline jet. By the mid-2000s, AirTran had become the largest 717 operator in the world. But everything changed in 2010, when Southwest Airlines announced it was acquiring AirTran. On the surface, this was a smart move. Southwest wanted AirTran's Atlanta hub and valuable slots at busy airports like Washington National and New York LaGuardia. What Southwest didn't want was the 717. The 717 simply didn't fit with Southwest's famously simple all-737 fleet. For decades, Southwest built its entire business model around the efficiencies of operating one aircraft type. Pilots, mechanics, spare parts, training, all streamlined. Adding a small, niche fleet of 711s would have broken that model, so Southwest needed an exit strategy, and that's where Delta entered the picture. Around 2012, Delta was facing its own fleet challenges. The airline had a large number of aging DC-9s and small regional jets, that were becoming inefficient and expensive to operate. The 717, despite its limited production run, offered an elegant solution. It could carry around 110 passengers, making it a perfect replacement for Delta's 50-seat regional jets, which were losing money as fuel prices rose. In 2012, Delta struck a deal with Southwest to take all 88 of AirTran's 717. It was a win-win arrangement. Southwest rid itself of an unwanted fleet, while Delta gained modern, reliable jets at a fraction of the cost of buying new aircraft. The agreement included favorable lease terms, making the 717 one of the most financially attractive acquisitions Delta had ever made. By 2015, Delta had fully integrated the 717 into its operations. The aircraft was based out of key hubs like Atlanta, Detroit, and Minneapolis, serving short-haul routes where larger jets would be unprofitable, but where regional jets were too small. For passengers, the 717 offered a comfortable 2x3 seating layout, wider seats than many regional jets, and a surprisingly quiet ride thanks to its rear-mounted Rolls-Royce BR 715 engines. This unlikely transfer, from Boeing's forgotten jet to AirTran's backbone to Southwest reject, ended up making the 717 central to Delta's short-haul strategy. And what began as a cost-saving move soon revealed deeper strengths that kept the 717 flying far longer than anyone expected.
By the time Delta fully integrated the Boeing 717 into its fleet, the airline began to realize it had stumbled into a surprisingly capable workhorse. On paper, the 717 looked outdated, a derivative of the DC-9 design with a T-tail and rear-mounted engines that screamed 1980s. But in practice, it delivered exactly what Delta needed: reliability, passenger comfort, and efficiency on short, high-frequency routes. One of the biggest advantages of the 717 is its Rolls-Royce BR 715 engines. These engines are quiet, fuel-efficient for their class, and built to handle the intense cycle counts of short-haul operations. Unlike regional jets, which often struggle with wear and tear when flying multiple short segments per day, the 717 thrives in that environment. Delta quickly learned that these aircraft could cycle in and out of its hubs dozens of times a week, without the kind of costly downtime other regional jets demanded. Another key strength is capacity. With about 110 seats, the 717 fills a niche that few other planes can. For Delta, it became the perfect solution to upgauge routes previously flown by 50-seat regional jets. That meant Delta could carry more passengers per flight, reduce unit costs, and improve profitability without overshooting demand with larger 737s or A320s. This balance is what kept many smaller markets connected to Delta's hubs. From the passenger perspective, the 717 offered a noticeable upgrade. Instead of cramped regional jets, travelers got a mainline aircraft with a 2x3 seating layout, wider seats, and more overhead bin space. The ride was quieter too, thanks to the rear-mounted engines. For frequent flyers, the 717 felt like a real airplane compared to the smaller CRJs and ERJs they were used to. Of course, there are drawbacks. The 717 was never built in large numbers, meaning parts can be expensive and specialized maintenance knowledge is harder to come by. As the aircraft age, finding spare components becomes a challenge. Fuel burn is also higher compared to newer designs like the Airbus A220 or Embraer E2. Delta knows the 717 isn't a long-term solution. It's a stopgap that has served incredibly well, but one with a ticking clock. Still, the economics worked out. With low lease costs from the Southwest deal, relatively low maintenance expenses thanks to robust design, and the ability to replace inefficient regional jets, the 717 has been punching above its weight in Delta's fleet. Against all logic, this forgotten Boeing turned into one of Delta's most strategically valuable assets.
The Boeing 717's story at Delta is a rare case where an aircraft once seen as a failure found new life and purpose. But nothing lasts forever. Delta has already started planning its retirement, gradually shifting shorter routes to the Airbus A220 and larger narrowbodies like the A320neo family. Industry insiders suggest the 717 will likely be gone from Delta's fleet by the end of this decade, perhaps even sooner if Airbus can accelerate A220 production. Still, the The 717 has proven its worth far beyond what anyone expected. It rescued Delta from the inefficiencies of 50-seat regional jets, kept mid-sized cities connected to major hubs, and gave passengers a more comfortable ride than they might have imagined from such a niche aircraft. For a plane that was once dismissed as a misfit, it carved out a meaningful legacy, especially at Delta. And here's the irony. The 717's greatest success story didn't come from Boeing or McDonnell Douglas or even AirTran. It came from Delta, an airline that knew how to get value from an underdog. If you enjoyed this deep dive into aviation's quirkiest success story, make sure to subscribe. More fascinating stories about aviation's past, present, and future are coming your way.